Since the 1980s, the rise of the U.S. financial sector has led to a series of increasingly severe financial crises. Each crisis has caused more damage, while the industry has made more and more money. As early as 2004, the FBI was already warning about an epidemic of mortgage fraud. They reported inflated appraisals, doctored loan documentation, and other fraudulent activity. In 2005, the IMF's chief economist, Raghuram Rajan, warned that dangerous incentives could lead to a crisis. Then came Nouriel Roubini's warnings in 2006, Alan Sloan's articles in Fortune magazine and the Washington Post in 2007, and repeated warnings from the IMF.
I say that on behalf of the institution, the crisis which is in front of us is a huge crisis.
Who did you talk to?
Government, Treasury, Fed, everybody.
In May of 2007, hedge fund manager Bill Ackman circulated a presentation called Who's Holding the Bag, which described how the bubble would unravel. By 2008, home foreclosures were skyrocketing, and the securitization food chain imploded. Lenders could no longer sell their loans to the investment banks, and as the loans went bad, dozens of lenders failed. The market for CDOs collapsed, leaving the investment banks holding hundreds of billions of dollars in loans, CDOs, and real estate they couldn't sell.
When the crisis started, both the Bush administration and the Federal Reserve were totally behind the curve. They did not understand the extent of it.
We're going to keep growing, okay? And obviously, I'll say it, if you're growing, you're not in recession, right? I mean, we all know that.
In a matter of days, one of the pillars of Wall Street...
In March of 2008, the investment bank Bear Stearns ran out of cash and was acquired for $2 a share by JP Morgan Chase. The deal was backed by $30 billion in emergency guarantees from the Federal Reserve.
That was the time when the administration could have come in and put in place, various kinds of measures that would have reduced system risk.
The information I'm receiving from some entities is the end is not here, that there are other shoes to fall.
I've seen those investment banks working with the Fed and the SEC strengthen their liquidity, strengthen their capital positions. I get reports all the time. Our regulators are very vigilant.
Governor Fred Mishkin is resigning effective August 31. He says he plans to return to his teaching post at Columbia's Graduate School of Business. His departure leaves the Fed board with 3 of its 7 seats vacant, just when the economy needs it most.
On September 7th, 2008, Henry Paulson announced the federal takeover of Fannie Mae and Freddie Mac, 2 giant mortgage lenders on the brink of collapse.
Nothing about our actions today in any way reflects a changed view of the housing correction or the strength of other U.S. financial institutions.
Merrill Lynch, another major investment bank, was also on the brink of failure. And that Sunday, it was acquired by Bank of America. By Friday, September 12th, Lehman Brothers had run out of cash, and the entire investment banking industry was sinking fast. The stability of the global financial system was in jeopardy.
Over the weekend, Lehman Brothers, one of the most venerable and biggest investment banks, was forced to declare itself bankrupt. Another, Merrill Lynch, was forced to sell itself. Today, crisis talks are underway.
World financial markets are way down today following dramatic developments.
目前雷曼兄弟已经进入了破产清算程序，著名的会计事务所普华。
Crise, panique. La presse française annonce clairement la couleur.
In September 2008, the bankruptcy of the U.S. investment bank Lehman Brothers and the collapse of the world's largest insurance company, AIG, triggered a global financial crisis.
Fears gripped markets overnight with Asian stocks slammed.
Stocks fell off a cliff, the largest single-point drop in history.
Share prices continued to tumble in the aftermath of the Lehman collapse.
The result was a global recession, which cost the world tens of trillions of dollars, rendered 30 million people unemployed, and doubled the national debt of the United States. Paulson and Bernanke had not consulted with other governments and didn't understand the consequences of foreign bankruptcy laws.
Lehman Brothers London continued to empty their
Under British law, Lehman's London office had to be closed immediately.
all transactions came to a halt, and there are thousands and thousands and thousands of transactions.
The hedge funds who had assets with Lehman in London discovered overnight, to their complete horror, that they couldn't get those assets back.
One of the points of the hub failed, and that had huge knock-on effects around the system.
The oldest money market fund in the nation wrote off roughly $750 million in bad debt issued by the now bankrupt Lehman Brothers.
Lehman's failure also caused a collapse in the commercial paper market, which many companies depend on to pay for operating expenses such as payroll.
That means maybe they have to lay off employees. They can't buy parts. It stops business in its tracks.
Suddenly, people stood and said, listen, what can we believe in? There's nothing we can trust anymore.
That same week, AIG owed $13 billion to holders of credit default swaps, and it didn't have the money.
AIG was another hub. If AIG had stopped, all planes may have to be, stop flying.
On September 17th, AIG is taken over by the government. And one day later, Paulson and Bernanke asked Congress for $700 billion to bail out the banks.
We're coming together.
They warned that the alternative would be a catastrophic financial collapse. When AIG was bailed out, the owners of its credit default swaps, the most prominent of which was Goldman Sachs, were paid $61 billion the next day. Paulson, Bernanke, and Tim Geithner forced AIG to pay 100 cents on the dollar rather than negotiate lower prices. Eventually, the AIG bailout cost taxpayers over $150 billion.
$160 billion went through AIG, $14 billion went to Goldman Sachs.
At the same time, Paulson and Geithner forced AIG to surrender its right to sue Goldman and the other banks for fraud.
I urgently needed money.
On October 4th, 2008, President Bush signs a $700 billion bailout bill. But world stock markets continue to fall amid fears that a global recession is now underway. The bailout legislation does nothing to stem the tide of layoffs and foreclosures. Unemployment in the United States and Europe quickly rises to 10%. The recession accelerates and spreads globally. By December of 2008, General Motors and Chrysler are facing bankruptcy. And as U.S. consumers cut back on spending, Chinese manufacturers see sales plummet. Over 10 million migrant workers in China lose their jobs.
At the end of the day, the poorest, as always, pay the most.
The crisis started in America. We all know it will be coming to China. Some factories try to cut off some workers. And some people get poor because they lose their job. The lives get harder.
Even as the crisis unfolded, we didn't know how wide it was going to spread or how severe it was going to be. It's a very globalized world. The economies are all linked together.
We were growing at about 20%. And then we suddenly went to -9 this quarter. Exports collapsed, and we're talking like 30%.
Every time a home goes into foreclosure, it affects everyone who lives around that house. Because when that property goes on the market, it's going to be sold at a lower price. Maybe before it goes on the market, it won't be well maintained. We estimate another 9 million homeowners will lose their homes.
The vast majority I've seen lately, unfortunately, are people who've just been hurt by the economy. They were living, day to day, paycheck to paycheck, and unfortunately that ran out. And unemployment isn't going to pay a house mortgage. It's not going to pay a car bill.
I was a log truck driver, and they shut down all the logging systems up there, shut down the sawmills and everything. So I moved down here on a construction job, and the construction job got shut down too. So things are so tough. There's a lot of people out there, and pretty soon you're going to be seeing more camps like this around because there's just no jobs right now.